before we get into tonight's lesson, I just want to say thank you. Thank you for the nice comments. Thank you for the feedback. Thank you for showing that my time is not being wasted. I really do appreciate it. Without you guys, I wouldn't be Forensic Forex. I just know that I want to bring the best value and put my best foot forward for you guys whenever it comes to the markets. I want to curate something that no one else brings to any platform. Wherever this video is being posted, I just want to know that I'm putting my love into this and I'm not trying to get one over on anybody. I'm just putting my heart out there and telling you guys exactly what I see on the charts and how I think the trading community is going and how I think, people shouldn't be paying for memberships that are expensive and they're not gaining anything out of it. The trading isn't improving even when they go into a private mentorship. I want to bring something to you that no one else can. So with that being said, let's jump right into our lesson. We're going to talk about the weekly range review, IPTDA true day sessions. We're going to talk about the IPTDA look back data range on the start of the new month. We're also going to talk about the New York model. We're going to talk about the ICT ATM method. We're going to talk about a lot of things today. Let's take our time tonight and really break this down. I do have a little cough, so do be patient with me. I might take a sip of water here and there, and I might even cough. I might edit it out or something. If you've been following me for a while, I normally like to start off the Forex Fridays with the weekly range review. The weekly range review is just to drill a image in your head to where you most likely will find buy and sell setups and how they normally form. Every week it's going to look different, but they're going to be similar week by week. They're not going to be identical perfectly, but you're going to see situations where the moments in time really click and you get an opportunity to get into the market and execute a trade. So to begin with, the weekly opening price is going to be your natural indication to overbought and oversold. So once price is above this opening price, which is Sunday's opening price, you're in a premium. Your most ideal setups are going to be sell setups. Now, does that mean every single time price is above Sunday's opening price, Monday, Tuesday, Wednesday, Thursday, Friday, you need to sell, or even Sunday, you need to sell? No. Things need to happen in order for you to sell. Now, the same thing vice versa, discount. If the market's in a discount, that's an ideal buy scenario. However, you want certain things to unfold first in order for you to get into the market long. So we're going to talk about a few things today. Whenever I'm looking to sell a market, I'm normally looking to sell on a Tuesday or a Wednesday. Most ideal setups is Tuesday, Wednesday. Now, sometimes those that know me and follow me on the channel or the chat room, I incorporate the Asian session model all the time, especially if I'm trading the yen cross pairs. But I do believe in the late PM sessions, there's a new opportunity to probably catch the trend of a turning point. Not all the time, but sometimes it's there. All in all, when I'm looking for a setup, I'm normally trading on Monday, Tuesday, Wednesday, sometimes Thursday, if I still have room to understand where price action is going to go. Here we can see gold made the high of the week on Wednesday, and the low of the week was on Monday. So price came from down below in a discount, dropping below the weekly opening price and then rallying up. We get here on Wednesday, and we're going to talk about this red line a little later, but this red line is significant to the price action that we're seeing here. We can see price comes up one more time on Wednesday and takes out Tuesday's high. Now, that is an opportunity for the commercials to sell. Why? Because you're breaking the buy stops that are above the high. You're triggering market orders. There are traders that are looking to break out here and go long, and there's traders that were short that have a trailing stop probably above this high. So somebody that had caught an opportunity to sell gold down here, most likely their stop loss is going to be here, and price is going to run it up. Or someone's going to use a buy stop to use to go long to trigger themselves into the market on strength. So it would look something along the lines like this. Someone came to sell, they're selling, they're in profit, and then they're placing their stop loss above this high. Or someone's waiting for price to get back up to this high for them to buy long here and it'll place a buy stop order to lock them into the market long. And as you can see, with that idea, you get retail traders long and you wipe out anybody that was short making profit. Here, we can see price tumble down, straight down after taking out that high. That is not by coincidence. There's something occurring here. The fact that we see price take out a swing high and then reprice this quickly down is showing you that someone's stepping into the marketplace. The fact that we break a swing high formation here and then we come down and break swing lows, that should be signs to tell you that the market makers are getting into the market and potentially turning price around. And then from there, from Thursday going into Friday, we saw a sell-off. But this is all occurring where? Above the weekly opening price. And it started from this Tuesday's high getting ran by Wednesday. And you'll notice on the 1 hour, the very first fair value gap that forms after breaking this high here, you can see price trade right back into it. So let's just mark that off as a reference point. Look at that very first fair value gap price trades into. And what does it do inside this fair value gap? It makes a lower swing high formation. So if we were to look at this from a small or short-term trend going lower here, since it's hindsight, how can you read this price action? Well, I would simply say you have a swing high formation here. 1, 2, 3. That candle here, the high here, that's the swing high. Price breaks down after taking out Tuesday's high. So don't forget the context or the catalyst here. We're breaking a previous daily high on Wednesday. Once we break that previous daily high, we get a fair value gap, and then we get this lower swing high formation. Normally, when trading, I've always noticed that the lower swing high or the turning point, right, where the sponsorship is going to occur, it's most likely inside the PDA rate of the fair value gap, or let's say a breaker or mitigation or order block, a volume imbalance, a gap. It's normally going to make the turning point inside the inefficiency in price. That's the footprint or the fingerprint that I want to try and go short in. That's an opportunity there. So price will probably try to wait for the London session set up and try to get a short here, right? Some optimal trade entry, something along the lines here on the lower time frame to go short. But if you want to go short here on the hour, you could do that as well. But you have to look at something on the lower time frame. We're not going to get into that right now, but follow along. We have that higher swing high, break of a high. Now we got a lower swing high after getting this speed down here, this fair value gap. Now, many people may say, oh, but there's no market structure shift here. We got a fair value gap and we don't even break any swing low after this pullback. That is very true. But oftentimes when I watch the market, studying it, normally after breaking a high, the very first fair value gap can be the opportunity of you catching the tiger by the tail. Sometimes you can't catch the break of the high and then sell because you don't know sometimes how high it's going to run above this high. May it run 5 pips, 10 pips, 20 pips, 35 pips, 40 pips, 50 pips, then it drops. Normally you just wait for the fingerprint. That's my confirmation. That's what makes me comfortable to find the short. All while being where? Above the weekly opening price while breaking the previous daily high. We get that lower swing high formation. Now watch how this unfolds. This is a lower swing high. And that's a higher swing high. It all starts with this, right? The higher swing high, or the swing high that started first. Now here, looking to go short because you know that fair value gap is where they're most likely going to go short after breaking the high. We play it forward. Let's slow it down. And look how quickly price breaks back down. After running into that fair value gap multiple times, look at how it runs back down to what? The sell side liquidity. Going into Thursday. So Thursday runs Wednesday's low. Look at how it draws itself to the previous daily low. Very simple ideas of where the liquidity may draw to. You have these highs and lows of previous days. They can be targets. They're targeting that low because of that fair value gap here. And price breaking the buy stops above here. Liquidating orders. Trapping retail traders long. now going short. We're getting lower swing highs. You can see there's even a lower swing high here. I'm not going to mark it off. But let's just look at some of the inefficiencies that if price made it, let's see if it trades back into it. You have another, what is that? Fair value gap. Let's mark it off. That's a fair value gap. This is on the hourly chart. It also runs, you can see here, that's a swing low. Look how the fair value gap is running that swing low. Crucial. Right there. That's the market shift. It's the same thing here, but this one doesn't have the market shift. This has the market shift. So ideal to probably find a sell setup inside this session. Now, if you're within the dead zone, and we'll talk about all the IPTDA sessions, if you're in the dead zone, leave it alone. Or wait for the next live session. And when I mean live, the sessions that are not the lunch sessions. And we'll talk about that a little later in the video. That's the market shift here that's occurring. So we'll just leave that as MS. And this is what I was trying to walk you guys through on the chat. And I showed you guys the ICT ATM method in the chat. Sent a screenshot of what exactly what he was talking about in that video was happening here. Market structure shift here. Now we wait probably for the next live session after this, because you're in the dead period, would be the Asian. Wait for a short opportunity within the Asian session. We play it forward. You can see here, that's the Asian session right there. And price, ever since trading up into that fair value gap, look at how the candles even close above it. Because many people have that question as well. Oh, what about the wick or where the close of the candle is? Notice one candle closed, 1 hour candle closed above the fair value gap. Would you say this fair value gap is a failed setup? I would not. I don't like to justify it by the close or the wick in my personal experience. Many people may say different. I think that sometimes the market will reach above that area. It's not going to be completely perfect. Sometimes it is. Like, for example, here, price stayed within the boundary of this fair value gap. This one, it did not. I mean, many people can argue, say, what about the mixing of this, right? The last up close candle, fair value gap, and this. So it's most likely going to draw into some region here. That's a good idea as well. I don't like to knock down ideas. I like to say that could potentially happen as well. And that's another way of viewing it. Many people view the market differently. Price trades up, creates another lower swing high formation considerably from this and that, especially this one up here. This swing high is way lower. And it's happening where? Inside the inefficiency. That's the good part. Around here or around a PD array. Price then breaks down going into the next day, taking out what? Thursday going into Friday. Friday takes out Thursday's low. And we're able to capture that sell setup going down. It's that previous day low during the New York session. And we'll talk about that setup as well. There's a lot of things we got to talk about tonight. But as you can see, that's how we would play that out to catch that sell setup. And we'll talk about the intraday. But that's what I would generally use as a line in the sand to tell me, okay, if I'm on this side of the sand, of this line, I'm in premium, only hunt sells. If I'm on this side of the line in the sand, I'm on discount and I'm looking for buys. And that's how I would do that. Very simple idea and simple approach here. But look at this high here. This old high is the IPTA look back 20 range period. And we're going to talk about that as well. I know I've been saying this already. I'm going to talk about this. It's going to be great. I'm telling you guys, just follow along. Bear with me. So DXY. So clearly gold's going up. It has an inverse correlation to DXY. DXY is going to go up. Right? So if we see gold, given hindsight, it was going down. DXY is going to do inverse. It has to. That's just the way these pairs work in tandem. If gold goes up, dollar must go down. If gold goes up, if dollar doesn't go down, there's an SMT divergence. But if gold goes down, dollar must go up. That's just the way it works. Weekly opening price, premium, discount. Have here marked off ideal buys, ideal sells. Let's check out the days. The low of the week today, for this week, was Tuesday. You can see that here in Tuesday. So price takes out Monday's low. That's why I put the dollar sign here. Monday's low, and then rallies higher. It goes straight up. Wednesday takes out Monday's high. It's still in a bullish trend. Thursday takes out Wednesday's high. It's still in a bullish trend. And then you can even see here, Friday takes out Thursday's high. And we know that we were talking about dollar in the daily updates, that there was that huge liquidity void on the downside as we go into the month. So just to briefly look at it real quick so we have an idea of what we're talking about. There you go. That liquidity void all the way down, we were saying something must happen. I had the caution signs here, 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 and here. Right? Took out the IPTDA 20-day low, 40 and 60. I said that there was most likely going to be some type of pullback in price. Be careful for that. And it showed itself here. It even gave the down close candle and rallied up. Everybody knows that entry technique. If you're expecting price to change trend, you caught it and you had the idea to buy, you just wait for a down close and a new uptrend. You buy there. I'm not saying you would catch that, but that's pretty advanced knowing that this is probably going to be the turning point. But if you did have that logic and you knew on this day I need to buy because I know dollar's going to go up, you take that and you buy at the open, you buy at the close, the buy limit and a buy stop. Dollar rally back up. So if you look at it, this is the 1 hour. Look at the liquidity void that we have here, right? On the daily, it was showing you how it looked like that. Price is coming back into that range. But look at where it's buying. Once again, discount. Discount. We're also going to jump into another day. So here, Tuesday, right? Let's break down Tuesday real quick. So looking at Tuesday, very ideal day. We're in a discount. We're taking out the previous daily low. And within the day itself, we have another concept called midnight opening price. So the true day, IPTDA start of the day. Midnight, 12 a.m., noon, New York Eastern Standard Time. If you look at this day here and mark off the opening price here, you can get it. We'll put it on the 15-minute time frame. And we'll actually rewind it back to the start. And do it at the start. And play it forward. There we go. So that's the open. We'll delete this. That's midnight opening price. So the same ideology that I'm showing here applies here. Anything above 12 a.m. opening price is going to be premium. Anything below is going to be discount. So that's the line in the sand here. From on this side, discount. From on this side, premium. We're also below that dash line, which is Sunday's opening price. So we're in a discount for the weekly range. And we can also look at us being in a discount for the intraday range. The actual day itself, we're in a discount. So there's double confluences here. Now we can take it a step further. If we're looking to buy, because we broke the previous daily low here, Monday's low going into Tuesday, and we think that this could be a turning point or where the market's going to make the low of the week, we wait to buy in London or New York. So I'm showing you the steps of what I think about as going and as a trader and trading that day. We wait for 2 a.m. So mark off. We'll put it up here. Because this essentially is going to help you walk through the actual IPTDA true day sessions. So we have the Asian session, which is a live session. Then we have the London session. It's a live session. In between here, we have a dead zone. And this dead zone, in my opinion, I would call it the Asian session lunch because it happens after Asian session and London kill zone doesn't start till 2. So between here, we have buy side and sell side that we could use. So we have a swing high here and a swing low here. We can see price takes out the Asian session low prior to London. Before London, it already did. So this sell stops below here. But we take out this swing high here. You can anticipate probably a short coming along here because we took out that swing high right there. Which one is it? There we go. See that swing high taken out? That's the Asian session lunch session. So this is how I would frame, let's say, a London session setup. I would use that time period as my liquidity pool to try and find something in the market, whether it's 10, 15, 20 pips, and gradually build on it if I can, and compound it and pyramid it. If I can't, I just take the 15 and I run with it. A win is a win. So we have that swing high. That's rated. Let's just see what happens here. We're going to go down on the 1 minute. Once that swing high is broken, you probably look for a fair value gap. You look for the session's opening price. So there's a lot of concepts here. That's that swing high during the dead period here, the 80 session lunch, that we're using as a liquidity pool. We have what? This low of that session. Let's not forget that. We have this low of the session as well, which sell side liquidity is residing. We're now currently above midnight opening price, premium. We're not above Sunday's opening price though, but we're still above in a premium for the day. We have the London session opening price, which is here in the red dotted line. So we're going to say 2 a.m. open, so we're not confused. That's midnight's opening, and that's 2 a.m.'s opening price, and that's Sunday's up there. When price is above here and we're taking out buy side liquidity, we could probably look for a fair value gap to go short in above the opening price, because anything above as well is a premium or discount. See how fractal this is? You're going to see. So price clearly sells down. Let's say we didn't get any opportunity to sell here on the 1 minute, because I'm showing it on 1 minute. We can see where it's coming from. Premium for the session, premium for the day. Sell setup. Look at how it tags that. Can't be by random choice. Tags that really nice. Knocks it out. Now we take out sell side. Now at this point, where are we considered to 2 a.m.'s opening price? Remember, the London session doesn't end till 5 a.m. It starts from 2 to 5. And this time period is 12 to 2. Right there. 12 to 2, dead period. This is 2 right here, all the way up to 5. That's the time period we have here for the London session, or the London kill zone. That's all we have left. Well, we just took out sell side liquidity. Now, if we took out sell side, is there buy side that's left? Right here, up here. There's the buy side all the way back up there from that high it dropped from. There goes that buy side that we can use now. See how you're framing the liquidity as you go along? Now we could probably wait for a fair value gap to form. So you can see one here. There's a fair value gap here. There's a fair value gap here. Volume imbalance here. Keep playing. See, it comes down. Let's say you went long here. Little to no drawdown. You'll take that. That's not a problem. And then look at how we rally back up. Let's speed it up. Right there, 5 a.m. Look at the storyline of that liquidity. Internal, external. Price is trading within a range, high to low. We get outside that range, then we get back inside that range, and then we break that range. Internal liquidity, external liquidity. Inside the range, outside the range. That's what occurred there. Now let's move on to see like the New York session. So this gray area here now forming. It's another dead period. This is the New York. This is the London lunch. It says from 5 a.m. to 7. You see it in gray. There we go. So now we get the start of that session. That's 7 a.m. And we want to see, based off of the 15, because I like to use liquidity pools on the 15, swing highs and swing lows. So let's not even look at this anymore. This, or this, or this. So we're just really focused on what we're looking at here. That is also the previous daily low right here. See that? That's what that is. So we're going to leave that there. But this is midnight opening price. And then this is the start of the New York session. This is 7 a.m. How much time do we have? All the way to 10. So you got 7, 8, 9, 10. A couple hours to find a trade setup. This is that swing low that forms inside. So we got sell side liquidity here. And we also have a swing high up here during the dead period. And we also have that other swing high. up here, the London high of the day, as the day is loading out still. We press play forward. You see we come back to the opening price. Look how sensitive that is. We got close to that here. So price is still ranging, but we're not doing anything here because we didn't even have a break on a buy side or sell side. Look how quick that was. But plus, I also got it really fast. Fast forward, but you see how it goes down first and then runs up. What does it run? Perfectly. Man, what a coincidence, right? What a coincidence. This is the New York model. That's the opening price right there. Look at how it's below midnight opening price. Don't forget, this confluence is here. This is 10 a.m. Anything below 10 a.m., 12 a.m., sorry, 12 a.m. is discount. Anything below 7 a.m. also is discount. So there's double confluence plus being below Sunday's opening price. Look how quick they get the market out of there, guys. Look how quick they do that. Look how quick they move to price action. Quick rundown, run out all the sell stops. Trigger people to go short. I think dollar's going to go short. Breakout retest. They think it's going to go short. Psych, goes the opposite direction, runs back up. So anybody that was profitable going up has a stop loss down here. And any retail trader that was thinking to go short is probably going to have a buy stop. So preventing price from going up and running their equity when they're in a sell position. They have a stop loss probably above equal highs or something when they get into this short down here. And it runs it too. See how quickly they take both sides of the market out without you realizing? That quick, guys. But notice, runs down. That's that 15-minute swing low. Get out of there. Where is it occurring? The buy setup is should most likely occur below 7 a.m. You would rather want that fair value gap to be below 7 a.m. and even midnight. But here we don't get it because he price trades here, trades into that fair value gap, and then runs higher. The very first fair value gap with the volume imbalance here and here respects that and goes higher. So you can't win it all, but you could see the idea and speculation here. Going back up to what? Sunday's opening price. Fair value for the week. And that's pretty much what the New York session is. And we'll talk about that with gold as well. But a very good setup as well with that. But then after that, you can see price trades out. And then we're into another dead period. Right here. See that another gray zone? That's a dead period. That's the New York lunch session. And then in between that, that's your London close. So small reversal at 10, and it comes back trending in that direction. And that's all the sessions. What you're seeing highlighted here is all the trading sessions. The ones that have color, right, and not gray and dull, those are the dead zones. Don't trade those time periods. You're most likely going to be faced with consolidation. I preach this heavy. Do not trade in these periods. Do not try to trade late PM sessions, especially this one here after 12. You're done. Take your profits, go home. If you lost, you lost. Come back tomorrow. End the discussion. Here, though, 5 to 7, don't trade. From here, midnight to 2, don't trade. Wait till you get into the colorful sessions to trade again. Even Asian as well, depending on the pair that you're trading. So let's look at the IPTDA data range, highs and lows that we're referring to. So for the DXY, you can see how price comes above the monthly opening price. Notice this is all fractal. At the start of the month, we were talking about price probably taking out this high, maybe even a 20-day high, and then going short. Because of what? Our simple idea of the seasonality of July going short. And we got that. It followed the seasonal tendency perfectly. We got that short, and it broke down. We had many swing lows broken. But look at how every time it broke a swing low, it just kept going. Nobody was really expecting that, in my opinion. There are times in the market where it does accelerate this fast. I spoke about it in one of the daily updates. I said we may get price to run quickly down to this 20-day low. And I remember someone commenting saying, but we have to be very cautious. However, we can be cautious, but moves like this can occur and leave everybody without an opportunity to go short unless you've already got your ideal sell scenario above premium in a overbought territory. Like I said, most people do not catch the highs or lows of the month. But when you look at it this way, it almost is as if you have 20/20 vision where the market makers are most likely going to short if it's going to go down. So if your speculation is that the market's going to go down, you go short here. The IPTDA data ranges, I always use it at the start of the month. So the first official trading day was July 3rd. I can't use the weekends. I'm using 20 bars, not 20 days, because many people ask me that. Because when you use the trading view tool to count back, you see that's 20 bars, but you see it's including, I think, correct me if I'm wrong, I think it's including weekends. So those Saturdays and Sundays in between this 20-day period, I think it's including the Sundays. Same thing here. If I go back 40, it's going to be 56. If I go back here, it's going to be 84 days. But you can see it's 60 bars that I'm looking at instead. 60 days. Official trading days. 60 trading days, 20 trading days, 40 trading days. Then we have that 20-day look forward or cast forward period. That's the playing field. I have an opportunity within the next 20 days to catch a trade setup. Something I learned from ICT is that every 20 days, the market is most likely clearly going to target a new liquidity pool, either buy side or sell side. And if it doesn't, it's just accumulating orders and getting ready for another 20 days to go up or down, to raid and manipulate price to get traders in long or short. Up, down. That's your bearish month. If I had to say it in simple terms, first the month needs to go up, then it goes down. There are times where it doesn't really go up. It opens and then drops. The open is the actual high of the month sometimes, or the open is the actual low. If it's a bullish month, the open is sometimes the low, and there's no pull or inducement to the wrong side, then go short. Sometimes it's just open, straight down. It happens. But you can still catch setups like that. There are many entry techniques that you can use to utilize yourself to get into the market. If you're not seeing any of those ideal scenarios of running buy side, then going short. Since we had this sell-off here, we were anticipating that sometime in the near future, the dollar was going to give us something back up. It had to. This is very inefficient for the algorithm. It needs to fill that in. And I think that's what is currently occurring here. Do I know what's going to happen going forward? Not necessarily, but right now I can say I do think that we still have more upside to go. I'm just going to pay attention to this old 40-day low and see what happens on Monday, Tuesday, and see where price trades around, if it is still around the 40-day old low. And if we can get back to previous daily highs, like old highs here, see how on the way down, they're protecting all the highs because they're really short. They're net short. Because think about it. If you were the market maker, why would you want to run the high? You're already max short. You're in all the way, full gear. You hit the throttle. Why are you running highs for? You wouldn't want to do that to yourself. It would be counterintuitive. Price comes up, comes down. You go short. Protect your stops by running the lows and don't run the highs. Looking at gold. That's where we got that sell-off. We were talking about this in the daily updates. Now, the last daily update I did was on Wednesday. I think it was Wednesday. I didn't do Thursday, and today's Friday. But we were expecting probably a long setup here. So we had that down daily close candle here, and going into Thursday, I didn't do it. We did have that long in the late PM sessions, like Asian session. If you were in the chat, you saw how price was green at one point, right? It was running up, and we finally tagged the clean highs, and we got that swing high formation here. But we also broke that significant price point, the 20-day look back high from July 3rd. So count back 20 bars. The highest high within that quadrant is here. And we knew that we're most likely going to aim for 1980, and we got that. But ever since getting here, many people had questions speculating, oh, is gold going to dump from here? Is it going to sell? And I truly didn't think so. I thought that gold was most likely going to trade into this fair value gap and then get us to go back up to 2,000, fill in this market structure shift that we haven't touched here. So this SIBI here, sell side imbalance, buy side inefficiency, rather trade into that. Still down close days, so it's still an uptrend. We still have a couple days left to the month. So I wouldn't be surprised if it does still go back up. But as of right now, I'm just going to play it safe and just watch how price plays out. We've already made a substantial amount of profit. Going to wait for the payout at the end of the month from, prop firms and stuff like that. Take out some withdrawals from the live account. Play it smooth and preserve my equity. Don't go into the market knowing that you're winning big and you're on a winning streak and you're able to predict the daily draw, and now you go in and you over leverage and you're too excited and you burn all that progress you make. Take your time, find small setups, and just come out with a W for the month, right? You win the month and you move on. And that's all you got to do. You win the day, you win the week, you win the month, you win the week, you win the years, you win the decade, you win life. You win everything. You just get piece by piece by piece. You can't get everything. Every week is not going to be the same. You're going to struggle. Every month is not going to be. You're going to struggle. Like you can see here. Look at this month of June. Right? Look at June. Very sideways. Started trending lower, right? But very sideways. Environments that traders probably don't like. Look at the end of May as well. Sideways. Environment traders don't want to trade in. This. Sweet music, man. You want this. You want trend. You want movement. You want movement. I don't want stagnation. Price sitting sideways. That's boring. We need this price to move, 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 move. It needs to go up. It needs to go down. We need to catch the trend. And we caught that trend by seeing price dropping below, discount, and running up. Protecting this low. Like I said, ideally, they're probably net long here. Heavily net long. Because they didn't want to run this low. And you see the same thing for EU. I think GU as well. And even AU, I think. They didn't break that low. The 20-day low. Or the most recent swing low going into July. Price goes up higher. Down close days, you buy after that. Once we got here, I just was waiting for price. And I was watching it. And I was saying, this may be a possible scenario of price going short. Because at the same time, dollar was going low and breaking lows. Gold broke highs. So if the trend is going to continue, it's going to break a high. And dollar's going to break a low. So we could still see gold go back up and follow that idea. And then we see dollar go down. But if you look at it on, see this? We'll take all this off. That's that old 20-day low here. We even have the old 60-day low as well. But let's just say we're looking at the old IPTDA 20-day low. That's that same price point here. See the coordinates. Right? 1973, 160. Type it here. This is that old 20-day high right here in that quadrant. Same thing. 170. Is that the same thing? I think it's off. Yep, it is off. We got to get this price point. Copy this. And then we'll change this. That's pretty. It was still close. That's where that is. And you see how price respects it and then goes short. And that's we were able to see price trading back into that fair value gap. Look at how IPTDA is showing you the significant price point. How could that not be any more specific in price? How in the world did gold know? Right? This is crazy. Like, really think about it. How in the world did gold know, once I get back up from selling down here and I get back up here, I'm going to sell again? How did it know right there at that level? Has to be coded. It has to be something in the marketplace that is gearing off of past data to project future data. It was using this old high to then forecast this downward move. That's what was going on there. Take a moment to really soak that in. IPTDA levels are not random levels on the chart. Many people say, oh, but the high is already broken or the low is already broken. Why are you using it again? Doesn't mean the algorithm forgets it. Doesn't mean the market just forgets the level. It cuts through candles. Price will cut through a candle, come back to it, retest it, come back to it, retest it, fly right through it, reject right off of it. Things like that happen. You can see here when it first finally trades up into it in the month, right there, boom, hits it, finally hits the 20-day high right there, right? This new week that we're in, hits it, comes back into it again, runs off of it one more time, comes back into it again, runs back into it again, and then it sells off going into Friday. Look how many times it touched that line. I think it was more than 6 times it touched that line. I'm not really counting either, but almost like 6, 7 times, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times. I don't know if I counted this one. 10. 10 times it hit that level. And then it finally made a move. Can't be random. Not at all. And then we were able to find that Asian session set up here to go short. We'll talk about that as well. So we come here and we turn on this and we just look back right when it trades back into that level. Let's go on the 15-minute. See right here, in between here, that's the dead zone. Right in between there, that's the dead zone. And look how Asian session starts and it takes it out. Instantly takes it out. Look at how it takes that price point out. I don't even have it on this. Do I have it on this? This chart is more clear. I'm going to get into this as well. Here. From here, where is it at? 12 to 8. Between that 12 to 8, New York lunch, that's a dead zone. We're not trading there. Go down to the 15-minute time frame. You find the highest high or lowest low, or swing highs or swing lows that are not been broken. Once you find that, we have our liquidity pools. So we have this, what? Swing low. Right down there. This is a nice swing low. What's below this swing low? And remember, this is that 1 hour fair value gap, that blue shaded box. I'm walking through what I showed in the chat. Right there. That's that swing low. And then right, gotta see what happens in the next candle. Oop, pause. That's that swing high. So there's a swing high. Perfect. That's that swing high. See how the swing high is rated? We rate it. What happens here? We wait for some type of lower time frame setup. So we go down here. So right when it hits it, we go to the 1 minute, the Asian section model. Go to the 1 minute. You're waiting for what? A fair value gap going down. Now, it could be the one that creates the market structure shift, the fair value gap running through the swing low, or it could be the very first fair value gap that you see. So let's say I took this one. Very first fair value gap that I see here after taking out that 15-minute swing high here. Asian session model. It's on the channel. You can watch that video as well. When we play it forward, look at how price is showing signs to probably respect it. Now, does that mean you're always going to get it right and get no drawdown? Not necessarily true. See how price hits it multiple times and gets out of there? Multiple times. Here, gets out of there. Even has a candle that closes above the fair value gap. Like I said, people can argue fair value gap plus last up close, bearish order block. You can. That's another way of viewing it. Price breaks right through it again. Creates what? Another fair value gap. So like I said, not much, but it does run up. I don't know if your stop would be here, depending on how much you were able to risk. But we can see here, another fair value gap. There's no market structure shift, right? There's no swing low being broken with the fair value gap below. Another opportunity to potentially go short. Let's add in another confluence here. This line here, hopefully it's getting messy in my opinion. This is like so much on the chart. This is the Asian open. This is APM. Think about what's going on here. Same principle of the opening price, weekly opening price or Sunday's opening price, midnight opening price, the monthly opening price. This is the session's opening price. Anything above or below, you got your overbought and your oversold condition. You sell here, you buy down here. What's the catalyst? Breaking the 15-minute swing high between the New York lunch session. Here we go. And where's the swing lows or sell side liquidity? All below here. Phantom trend line, right? Anybody that likes to draw those funny trend lines, garbage. They're looking for break retest or something like that. It's all nonsense because they're not using anecdotal data, right? They're not using specific price points. They're drawing a random line on the chart. Remember, trend lines don't mean anything. You're drawing it by hand. It's a random angle. And don't tell me you have an indicator that can draw a trend line super perfectly. because the trend line itself is programmed to angle itself at a certain slant or degree. So is it really feasible? No, I don't think so. Same thing I feel about drawing support and demand zones. Be very specific. I'm specifically picking this. I'm not going to draw a box above this high and say wait till price get here and then I'm going to sell. No. I'm going to look on the left side of the chart and see if there's a fair value gap on the left side, see if it's trading up into that. But here, we focus on the 1 minute. We're looking at that fair value gap, breaks down. We get lower swing highs. And we're leaving where? Premium above the Asian session high. Sorry, the Asian session open. After taking out that 15-minute swing high, all in combination back. Look how we're running back into that 1 hour fair value gap that occurs there. Is it on this? Yeah, that's that 1 hour fair value gap. Right there, Asian session. Notice how the Asian session started the trend for the new day for 12 a.m. Even though the new daily candle does start, so Friday's daily candle already started forming around, for gold I think it's 6 p.m. Already started around forming 6 p.m. but would already be Friday. Even though it's saying Thursday, the new daily candle is already open, guys. Asian session is a part of that new daily candle, and you can see how it starts. Essentially, it is the high of that daily candle for Friday. Even though it's not here at midnight, don't confuse yourself here, because this is just the IPTDA true day open, where the algorithm starts to kick into gear again for the new day. But the new daily candle itself has already started for gold around 6 p.m. And then Asian starts the high of that new daily candle and it breaks down. Go back here. Look at how it sells off. And that's where you guys saw I was able to get the sell set up right there during Asian. And look at where it trends to. I'm going to put this right on the 15 minutes so we can get through it faster. Don't forget, we're still looking at that low down here. Right down there. 15-minute high, 15-minute swing low. You have multiple swing lows as well. So let's say this wasn't your initial target. Let's say this is like TB4, right? The last spot you would take your final partials. But if you went short here, where could you start taking partials at? Maybe this fair value gap here on the 15-minute or the 5-minute. So let's say your entries on, let's say you're breaking down, you're analyzing on the 15-minute. Notice I go down to a lower time frame to find an entry. That's how it goes. So if I was on the 1 hour and I was analyzing the 1 hour, I'll look on the 30-minute to find an entry. If I'm breaking down on the 15-minute, I personally, you could go back to the 5, but I personally like the 1 minute. Just go down the notch of time frames. 15-minute swing low here, 15-minute swing low here, here, or like I said, if you're going to do the 5-minute, you just find 15-minute swing lows or clean lows at price to target here, here, here. You can already see retail traders drawing trend lines here. Disgusting. That trend line gets marked. Look it out. 15-minute swing low. See you later. Nice, right? Many people don't utilize that. But look at Friday as well. It's insane when you see these things. Showing you the models here. Because people ask, you don't show the London session setup and you don't have a video on it. It's the same thing. I don't want to waste your time and make another video that's literally the same thing, just a different time period. Midnight to here. 2. Go back on the 15-minute. I know it's hindsight, you guys already see it. But it's okay. Go back on the 15-minute. Find the swing high or highest high within that quadrant. So let's say it's 2. I'm going to go with 2 o'clock. Right there. That's the high that forms within the Asian lunch session. So we put $sign above it. There you go. And that's also the opening price for London. Shout out to anybody that's in UK right now watching this video too. You know, we're kind of global in the chat. A lot of diversity. I really appreciate that. I like to see that. Different cultures and stuff. So we have 2 a.m. That's the open. We also have midnight. Confluences. Confluences, man. I'm telling you. Adds up. 12 a.m. Right? Where are we as well? to Sunday's opening price. We're way above it. So like over here, where is it at? It would be right, just to give a quick reference. Somewhere along the lines down here. That's the opening price. Sunday, you see that? Look at where we are. Way up in a premium. Go back down to the 1 minute. Price comes up. Takes out that high. Let me make sure I got this marked off right. For some reason, the 15-minute saying it's that. So that's not it. So we'll go here. Apologies. So we'll just go with the highest high that we see here on the 1 minute. Look at that run on the buy side here. And after running that buy side, what can you wait for? Wait for the fair value gap to go down. This is where I was finding that other pyramid setup, right? Because I was already already short up here in this area, and I was looking for another short here, right down here. Look at that. Look at that fair value gap. See that? Man, the confluences just don't stop. That's 2 a.m.'s opening price. This dash line. That's 12 a.m. opening price. So we're above that, guys. We're above it. Think about it. Don't get confused with all the lines. Follow me here. We're above that. That's still that 1 hour fair value gap. Look how we trade right back into it once again. Once again, it's still utilizing. Look how many times it runs into it, runs out of it. It's still utilizing it. Fair value gap here. Like I said, you can take the very first one that forms. It would be this one. And you go short. Stop loss above a swing high or a couple pips above it. You go short, aiming for what? Sell side liquidity. What's your sell side here, guys? Right down here, the lunch session, the Asian session lunch. That's your liquidity pool you're using for the London session. I want to see my shorts probably get down there. You play it forward. Look how many times. We're in a premium. Finally, we get out. We leave 12 and we leave 2 a.m. Premium plus Sunday, which was that line that we drew all the way down here. The Sunday's opening price. We're above that, so that means we're in a premium. We were above that, premium, we were above that. Look at the confluences adding up here. And we take out that session there. Low. Now, we also have another opportunity. New York is still going to come around. Now, what can we do? The same exact thing. Go on a 15-minute time frame, folks. Right? This is the New York model. This is how I was able to catch another opportunity to go short on gold. Because I figured take partials here, find another opportunity in New York. Stop. This is another time period. That is 5 to 7. Another dead zone. Let's bring it back. Find the swing high and swing low that forms between 5 here and 7. If you can't find a swing low, right, that's the swing low here. You could also use the lowest low of the session. There you go. Make that blue. We'll move this so we're not confusing that. And then we'll take that here, place that here, place this here. Place it there. I'll place it closer. Also utilizing the opening price of the session. Put it in the dash line, and we'll just put 7 a.m. on it. Now we're going to go down to a lower time frame and see what happens. There you go. You got your buy side, sell side. Look how tight that range is. This is why I do not trade during this time period. Only 2 things I normally think occur during these lunch periods. You're either going to face consolidation, as you see obviously here. And we're going to look at it with all the indicators on, and we're going to highlight just the gray sessions, which are the lunch sessions, just after this example. Most likely consolidation or a deep retracement or a deep reversal. I mean, sorry, a deep retracement, not reversal, to wherever the market is coming from. So if price was trending down and we got into this session, you could have anticipated London lunch pull back up. That's why those trailing stops get knocked out. Yep. You ever wonder why you can't hold on to your shorts from London? Because this time period can knock you out. So if you don't take partials before London closes, you may have your trailing stop above a high and it knocks you out. And it's all good if it gets up there. At least you were able to take something off and you put your stop loss within profit, so it's risk free, nothing taken to you or break even. You don't have to worry about it, right? But that's what happens normally during these lunch periods, and we'll talk about it. Press play, trade. Look at where we are now. Look at it, right? We take it out, press play, hold. Did we get any fair value gap yet? After breaking this high, look at it closely. We broke the high, we're above the open. Did we get any fair value gap yet? Do you see any? I don't. Price comes up again, takes out another high, takes out a swing high within its session, right? That's still buy side here that it just formed. It just engineered buy side liquidity. That's what just happened. The market pulled down and left buy side right above there. Run it. Run it again. Still no fair value gap. There it is. You see it? Here you go. There goes the fingerprint Forensic Forex likes to look for. Deontay loves this setup. And in my experience, I see it happen in gold a lot of the times. I'm not saying 100% of the times, but I'm saying a great handful of times. Like if I had to say on the percentage basis, I would say I think the setup occurs almost like 60 to 70% of the time. Just based off of this. No directional bias included. If I had to just exclude directional bias and had to use just a period to find a trade setup real quick, right? Let's say I wanted to trade a random pair and I was like, yo, it's about to be New York. Let me just set something up real quick for a scalp opportunity. I use this. Quick, easy approach to the New York session. Wait for the very first fair value gap. You see, look at the time period it's occurring in. 820. Influential price point here, right? CME open, right? News embargo lift going on here. Fair value gap. Another short opportunity. Price sells off. Another what? Fair value gap here. Now let's say, like I said, let's say you don't like the fair value gap, the first one I'm inferring to here, because there's no market shift there. Sorry. There's no market shift here because the swing low is not being broken with the fair value gap. Let's say you don't like that one. All you had to do is wait for this one. Right there. Look at that swing low. Ran right through with speed. Go short here. Another pyramid trade. So somebody in the channel, in the chat, had asked me, what's pyramid? Or what's compounding, essentially? Right there. That is one sell opportunity. That is two sell opportunities. Let's say we got another one, right? Look at this. Here to here. Another fair value gap. Yes, we don't see breaking structure through with speed, but price does sweep or swing low. We also have this small one up here as well. It was really small. Look at that. Those are all opportunities to sell. Granted, look at this up close candle once the market started breaking down. Market starts breaking down. Every up close candle was met with selling after. Up close, sells. Right? But let's say you didn't catch it there. You see the shift here. Swing low broken. Take this off. Swing low broken. Lower swing high. Same thing I show in the daily chart, right? It's funny when you see it fractal. Swing low, 1, 2, 3. Don't confuse yourself, folks. It's right there in front of you. Same way I break down that daily chart for you guys, the same thing is occurring here. Look at that swing low, broken 1, 2, 3. After what? Taking out buy side liquidity. Remember the catalyst. Took out buy side liquidity. Then we ran a swing low. That could be a change in momentum. That's a momentum shift. This is a lower time frame 1 minute momentum shift. That's what I'm showing you here. A 1 minute momentum shift. How much more closer to the truth can you be? Swing low broken. All you have to do is wait for the next lower swing high. And look at where the lower swing high lands again. Remember on the 1 hour saying the swing high, the lower swing high is most likely going to form. Let's get off a replay. wherever we are, this. Are we in the 1 hour? Yeah, we are. I don't have it marked off here. But that fair value gap. There. The one that we got a short in Asian and stuff. I said how many times it retested it, even closed above it. Look at how that fair value gap here, lower, swing high formation within the range of it. Same thing here. Look at this. Fair value gap. What's going on inside that? A lower swing high. Look at that. Lower swing high after what? Taking out buy side. Running a high. Running into what? Old highs. This is a swing high formation, by the way. So you go on the daily. Just to show it real quick. That's that swing high. Buy side. I said this was clean highs. I said I want to see price get up to here. All those phantom trend line traders, it ain't going to work. It's going to cut right through that trend line that you drew. Has no real metric to price action. Price action literally doesn't even realize you drew a magic line across your chart here. It doesn't even see that. You're acting as if this holds any value to what the market price is going to do. Doesn't do anything. Look at the lower swing high inside the fair value gap. See that? Same thing here. Lower swing high. Lower swing high. Hold up. Wait again. It's the same pattern again? Oh my gosh, I can't believe it. Lower swing high. Wow. Is it that simple, Deontay? Yeah, it is. Comes with experience to be this confident, though. Just want you to know. Comes with I've been doing this for 6 years. It didn't come overnight. Countless of hours staying up in the dorm room, not going out to parties, not chasing anything, just not being super materialistic, just trying to lock in, close the door, zone everybody else, and harness a skill that I can help pay bills, help my future, help fund a friend's business idea, help fund my business ideas, whatever it is. That's what I was doing for those many years. Locking in and reading the price action like this. The way I read it doesn't come quick to most people. For me, at least, it took years. It didn't happen. I know there's some people that are way better than me. I'm not saying I'm the best trader in the world, but I know there's people out there that grasp this like that. Like nothing. Like cake. Like, oh, I know how to read this market. And they shut it apart. And they're really great traders. It took me years to be really profitable. I didn't get really profitable until the last 2 years. Lower swing high, lower swing high, lower swing high. All within fair value gaps. Look at that. Swing low broken. Come on, folks. Wake up. It's always been in front of you. And I don't really show the 1 hour like that anyways. Right? 1 hour, momentum shift, wait for the lower swing high. You sell what? Back into previous daily low. That's your draw on liquidity. That's how you would do that. And that's essentially what I was looking at for gold going into Thursday, Friday. And I said, I'm showing you guys the answers with the ICT ATM method. I said, this looks familiar. I've seen this before. We go on the 1 hour. And I show this. Let's clear all this off. We don't need that, at least. Or this. We don't need none of this. But we do need this. And we do need this. This is the ATM method by ICT. So price on the 1 hour, like you said, in that screenshot, if you look at it, he says on the 1 hour, you could literally go on YouTube and type in ATM model by ICT and you'll see his video. Watch it. Great video. This could be the model that you've been searching for. He puts out so many models that people overlook. It's insane to me. Insane. Not even paid stuff. Free models he gave out way before, people started really getting in, trying to say, oh, I want to get into the last mentorship and the last charter session and stuff like that, or the last charter group. Man, he was giving out gems way before that. Price runs before he went free on YouTube. Price goes up, right? Takes out buy side. There goes the catalyst. There's a turning point here. But after it takes out buy side, what does it do? quickly reprices, and there's a market shift. There it is, right there. When you get that market shift, what ICT was trying to tell people was, if you have higher swing lows going up, and you just recently had a market shift, you could be targeting those swing lows. That's what's going on here. You raid buy side here, and then you look to go short when price trades back into that old low. And here, instead, I was being very specific where I was looking to go short. I said inside this range during the next live session, which was what? The Asian session. That's what I was showing there. I was trying to go short inside that Asian session here. Right in there. And I showed that setup there early in the video. So if you have to go back and watch that, that's what I'm talking about there. And I go short there. And when am I going to target once going short? The swing lows on the 1 hour. So I'm already ahead of retail. I know where it's most likely going to draw to. Swing low, swing low, swing low. Now there's other clean lows and swing lows here. I don't have to mark off every single one. Just marked off the obvious ones. And there we go. Now, do I think price still can get down here? Yes, I do. I still do think price could probably come down back to 1950, potentially even try to draw to 1920 if possible. But 1950 would be a reasonable draw because what? We have these swing lows here, and the market action on the 1 hour is still showing being bearish. Now, how would I look to go short? I would wait for what? Run swing low, leave the fair value gap, wait for price to trade back into it, then go short. Find the lower swing high. Look at that. Lower swing high, lower swing high, lower swing high. If it does run a swing high, it could also be just a buy stop raid. So if you see market structure running a buy stop above a swing high and then continue to go lower and break a swing low, that was just a buy stop raid. They just got a lot more retail traders to just jump back in long again. That's what they did. They run a swing high. Everybody thinks, it's going back up. Sad news is it goes short instead. So you happen to lose there. And that's the ATM model by ICT. So if you haven't had a chance, please go over to ICT. Do your due diligence on this model. I think this model could be very helpful for any skill level in Forex, whether if you're a beginner, novice, veteran, whatever it is. This model is very simple. And I think a child can understand this. That's how simple it is. Now, we're going to jump into... I think I covered it. Wow, I actually covered everything. Wow, I'm looking at my little to-do list, and I think I actually killed everything. All right, I just want to really talk about the sessions, though. All the sessions that you have throughout a day. So now I'm just going to clear this chart. Clear the chart. We're done. Might move on to another week. We still have IPTDA on our chart, so we're not too worried. I just want to show you all the gray highlighted areas. So these first two right here that you're seeing is the New York, not the New York. You're looking at the Asian lunch and the London lunch. So the first one for the day is the Asian, and then the second one for the day is the London. Notice in these gray zone boxes, you're most likely faced with consolidation. Most likely. Listen to what I'm saying. Most likely. Not saying every day you're going to get consolidation, but odds are you're going to run into consolidation. Look at it. Look at it. Let's scroll through this a bit. Right? Let's scroll. Time sensitive. Where are you hunting your setups at? When are you hunting your setups? Look how it runs the London lunch going into New York. Look at the sell. Come on, folks. That couldn't have been random. To come take out the buy side here to run back down to the sell side? Random. Same thing here. Look at the London setup, right? London opens, runs up, takes out the Asian session lunch high, runs back down to the Asian session lunch low. Wow. I wonder why. Let's go another day. This is 5 to 7, so this is the New York. Sorry, I keep saying New York. I need to change the color. Let's change the color because this could be confusing, folks. Let's do the Asian lunch in that. No, that's the London. Let's do the London one and like a. Let's do like a pink, right? Doesn't matter the color. And then we'll do the Asian lunch and then like a neon. Follow along. So we got the lunch and we got the Asian lunch. London lunch. London lunch is in pink. The Asian lunch is in that neon color. Look at how price takes out the sell side here and then gets back. Somehow finds a way to get back to the buy side. Whoa. How did it do that? Look at this. Asian session lunch takes out the sell side. Somehow finds a way to get back to the buy side. What are the odds? Now, not every day. You see here how it takes out the buy side, doesn't get back down to the sell side? That's okay. You're not going to get it every single day, right? And sometimes it's going to run a little further than you expected based on maybe where your stop loss is and based on the rules and parameters you have to your model. Same thing here. The guy runs the low, never runs the high. But in the near future, that high is ran. These levels are still significant. Nothing here. See how it runs the high here? Runs the high, doesn't get back down to the low. Does not. So I wouldn't be surprised. 1900 level gets tagged again because this low still hasn't been taken in a while. As far as I know. Let's see. No, it got close. But equal lows. Look at that. Equal lows, equal lows. So we could be onto something here. Could be slowly onto something. But we'll see. Can't be so optimistic sometimes. It really could be your downfall. You're really so pumped up and you want to know, oh, price is going to get to that price point. I'm going to make it get there. You're not. Price comes up. It's close to that high. So it fails to break that high, but then it breaks down, takes to the sell side. Look at here. Up, down. These are the periods I'm telling you not to trade in. Do not trade in these highlighted areas here that I have on the chart. Don't trade, because most likely it's consolidation. Now, the other one I want to show, and these are the sessions that I use to help the London model and the New York model. Like I said, it's not an everyday guaranteed, yo, I'm going to get 20, 15, 30 pips out the market. Not all the time. But when it does hit, I'm telling you, it hits, man. It hits. And then here in the gray, we have the New York lunch session. Now, this one is very much consolidation. You see it a lot more. And I'm still going back to previous days, you know. All the gray areas, new days, new days. Look at how the market is just ranging in that time period. I wonder why. It's got to be something going on. And I know you guys are smart enough to know what's going on here. I don't have to explain it. Something clearly is happening. Someone's not in the market. Someone's not there anymore. They're absent. They went bye-bye. That's why we call it the lunch session. You don't want to trade there. Yes, there are moments and times where that market does trend in a direction sometimes. But the fact that I even have the possibility of that session giving me the characteristic or phase of consolidation or accumulation, leave it alone. I'm all good. Notice I'm being very selective when I'm trading. That is the difference from successful and unsuccessful traders. Unsuccessful traders are just trading all day. It doesn't matter to me. Let me just trade. Let me just trade. Let me just trade. No. Don't just trade. Trade during specific times. For instance, a little advice. If your time session that you like to trade in is impacting your daily activities throughout your life, whether it's you're stealing time from your job, so you're at your job and you're trying to trade, get in trouble, you know, whatever the case may be, depending on how lenient your job is. I know some people probably on their phones. You're in the 21st century, modern day. People are always on their phones. Let's say your job isn't super lenient. You can lose your job, right? You want to trade when there's no distractions. You don't want to have people around. You don't want to have, you know, certain people in your space because it can throw off the way you trade, right? Loud music, you know, being under the influence, being nervous about something else. You got to really calm your nerves. Get into this market with a calm, level head. You can't get in here. You're already high with anxiety. You know, you're anxious. You know, you're really nervous. You know, you're in so much drawdown. You're ready to risk it all. No. Come in with a level head. Say, I got a plan. I'm not going to trade this session because I know most likely it's going to be consolidation. Let's wait for the next session. Let's trade Asian. Oh, we can't trade now? Oh, let's trade London. Oh, we can't trade now? Oh, let's trade New York. That's all you're trading. Asian, London, New York, and then sometimes London close. Do I prefer to trade London close? Not really. Not really ideal for me. I'd rather relax. I like the New York session set up the most. My personal and least favorite session is London. Because why? I live in New York, and by midnight, around that time, 2 a.m., 1 a.m., 5, everybody's sleeping. I want to be sleeping too. I love my sleep more than money. Nobody can ever tell me that my health is not as important as money. My health is way more important than any dollar bill or any pip on this chart. I don't care if I have to lose a couple pips or a big run because I slept out on London. Oh well, there are other days, 365 days, 12 months. We can get something out of the market. It's not going to be, oh, we're going to make a lot of money, but we're going to make something. And then even if we come out with a bad year, we're not, meeting our target expectations of profits or whatever it is happens. We got to roll with the punches. That's the life of being a trader. It's not going to be perfect all the time. Every month that you see me here, I know right now currently the track record on YouTube, oh man, amazing. But I know one day I'm going to run into a month where I have a troublesome case. For instance, AU. I forgot what month it was I was tracking it. I think it was April. I think I was doing AU. The poll one was AU, and I traded AU for that month, and we were in consolidation that whole month. Like, and I think it was AU, and I definitely think it was that month we had a consolidation. Was it April? I think it was April. Could have been May too. Once I traded something else in May. But look at that. Ooh. That price action is nasty, man. Trading back and forth. Boom. There it is, That's it. Look at that. Boom. June, July. There. There's excitement there. We're moving now. We're getting places. I like to see that. But even when you look at it here, right, it doesn't matter. Doesn't matter the currency pair. Same thing. It's time sensitive. Consolidation. Everybody wants to trade after all the sessions have been already finished. And I'm like, yeah, your idea, that sell setup, right? Like I tell people that sell setup, oh, I see a sell setup here. Never happens. It's not ideal. And get out of here. Nothing. What are you trading here? Nothing. How many more examples can we do? We're doing random days too. Nothing. Come on. How many times do I have to show this? I'm going to show this many times. So the whole trading community is like, yo, this is facts. Because ain't nobody else talking about this. When not to trade. People are always telling you when to trade. But when not to. I'm showing you. Don't trade here. Look at this, man. Yes, you get days like this. But look at how out of all these days that the market trades like this, you don't get a lot of them like that. Thousands of more of examples of the market just consolidating. Doesn't matter what pair, like I said. Let's take it on to, let's go yen. Look at the yen. Same thing. Look at the yen pairs. Same thing, man. Right? Look at the dollar pairs. Look at UCAD. Definitely UCAD for sure. UCAD for sure is going to consolidate here. Yes, you get those moments. Sometimes it's late PM news or someone speaking. But you get those moments. You don't want to trade there. That brings me to the end. I honestly think I covered a lot tonight. I think I went for about 2 hours. Should be posted soon, man. I really appreciate all you guys. I really do. Whether you follow me on TradingView, Telegram, Twitter, IG. Like I said, I'm not big on social media like that unless you follow my personal page on IG. You see what I do in my day-to-day life. Other than that, man, I don't try to post too much on it. I'm really active on Telegram channel. You guys know this. I'm in there every day for you guys. Questions after questions. I love it. Let's just keep pushing the strides into the community and show people how to read price action without any indicators. Peace.